What's going on, guys? Chris here, uh, talking about just ICT and list of reasons why today's price action is so choppy. So just on like the base answer of this, it's basically there's low volume and there's indecision in some way, and usually it's when things have gotten overextended big time, and so short answer is like liquidity issues, is low volume, and so that's one reason why it's choppy. Another one is indecision, but I don't know. I guess it could be that way. A clash between mean reversion and trend trading strategies, trend following means versus mean reversion. Usually when they're kind of in the middle, where both of them are going at each other. Basically, the war between the bears and bulls. That's basically what's happening. Somewhat indecision, and yeah. So we're just looking at just kind of what people are saying as far as just the choppiness. And so the first explanation is just low volatility, or no, low liquidity, and just maybe another one is the indecision because the Bulls and Bears are duking it out right now, and it's uncertain which way it's going to go. And then the next reason I would say is it's related to oil. Um, so just starting from the stock standpoint, we just go to ExxonMobil. So ExxonMobil, we have a huge gap here, but we gapped up, and it looks like it's getting ready for, I don't know, something, maybe a purge of the last week high on this ExxonMobil before we come back down. But I think uh, one of the, related to low liquidity is that there's people scared that these gaps are going to fill. And there's a lot of them all the way down. This is the H4. So if we go to like a higher time frame of ExxonMobil, like the daily, it's all the way down near the lows, and that's a lot. Like I don't know, it could even go down here. Um, so we just don't know. It could fill, and we're near the highs. Near the highs is low liquidity. The outlook, I mean, we got some fundamental data coming in on the calendar Thursday specifically. We just had the Fed talk, the different governors. But yeah, the first reason, low liquidity. The second would be a clash between the two strategies of trend trading and mean reversion. And another one that's interesting is is oil. Oil. So oil. I showed you oil on ExxonMobil. Now it's time to show on the crude. So we're into an untested H4 breaker that's right there to the upside. We could jump up. It looks like on the close, roughly, or within this last 4 hours, we've jumped up from here to here. So there's a chance that we could boomerang back up to the mean, the 50%, and then it gets decided, or we go into resistance again. That's been defended for a long time, like roughly right there. We can go launch into this extreme end of the zone. Perfect time to sell. That's basically that. And then the same thing with the West Texas oil crude. First retest on this this commodity on the H4 breaker, and yes, we broke the daily breaker to the downside. Let's see, and I think we didn't really get below. Let's see, this is a daily breaker, so maybe we did get below. So maybe, yeah, this is a good entry, not necessarily for professionals, but for the retail, that would be a good entry to the downside. Like, yes, we confirmed a retest resumption on the daily. The daily is just weird because it's like it's a lazy time frame. Like, I feel like, because there's a lot of chop that happens. It's not efficient, and like you could hold through some drawdown. The good thing is, it's like it's better. It's better than an H4. It's better than an H12, but it's not like a weekly. That's kind of just how I see it. It's it's filters out the noise, but at the same time, you have to hold a little bit of drawdown, a little bit of pain, in order for it to just actually be a success. Because it's not necessarily the best filter, but it's the next best filter, kind of, to hold through all the noise and or filter out all the noise. But here's where the noise is going to come back in. We're going to probably go back to these moving averages in the middle, the 50% line in between the bulls and the bears, or to the where the bears have been selling, like roughly around here, or like right there where this ATR line is. But yeah, like here's the 50% zone. But well, we semi weakness in oil would cause some people to be scared, or for low volume, low. So that could also cause the price today, or and then no significant news events till like midweek, middle of the week, Wednesday, Thursday. So there's a couple of reasons there, and if we were to look at liquidity specifically itself, going to the credit spreads, for one, that doesn't look good. Under resistance right there, and we go to the weekly, and we got the market structure thing turned on. Okay, so here is the breaker on the weekly. You retested it once, twice, 3 times here, but it's still forming a bear flag, and if anything, if this holds here, we might get a chance to make a deviation right here, or even above this range. I don't think it'll cancel out, but those are like 2 possibilities of deviation here, or a deviation here. But that's kind of what we're looking for as far as like near term, just like a rising wedge. If I were to give it a definition, like some sort of rising wedge here. And I don't know, the fact that it's holding, it signifies some strength in the credit spreads, but it's gonna break down. Like it's a weekly bearish breaker to the downside. It's a bear flag. Like it's a rising wedge. Like it's just the only thing we're really aiming for short term wise to the upside is that it fills the upper bound of its limitation, and its limitation is the bear flag top, and we're just trying to be efficient with the price and pushing it to where it would fill for a bear flag, and we're assuming that it's going to continue making a bear flag, but that doesn't dispel the fact it's still a bear flag or a rising wedge. So the fact that it's holding here, deviation right here, left shoulder, right shoulder, or left. I guess this down candle is left shoulder, right shoulder here for the retest, deviation, or deviation here. These 2 peaks, troughs, and then left shoulder, right shoulder. So it's any way you could look at it, but it's like a short-term bottom until there's a deviation to the upside on the credit spread. So like it's mimic this short-term stuff is seen in oil, it's seen in credit spreads. I don't know, we could look at the dollar really quick. So we had a weekly breaker to the downside here, a nice deviation, left shoulder here, retest here, and we're back above on the weekly here. Close the week above here, these candles. So because we close the week above here, we have a chance to attack this supply candle that's specifically right here on the week on the Euro US dollar. So we this will form a deviation here. Most likely this wick high, and it looks like it's gonna try to fill the quarter. I think this is the quarter high and low, and I think that's the range it's trying to fill. It's trying to fill the quarter high and low. Let me just double check. Yeah, that's the quarter high and low. So it's going to either fill or deviate right above the quarter high and low, because look at there, that supply candle is right where the quarter begins on the open. I don't know, the high. That's where the quarter, it begins on the high. This is where the quarter begins on the low. And I wouldn't be surprised if we fill the quarter or even wick above it for deviation. And so when it comes to high yield, the HYGH credit spreads, when it comes to Euro USD, the oil, like there's these like short term moves, and each one looks different. Whether it's Euro USD with the quarter, oil. I mean, we could try to take a look here. So with oil, it's nowhere near the quarter, but it's still a short-term like deviation. Left shoulder, right shoulder deviation. As long as it holds, it's gonna fill out wherever that will be. Like here on the weekly, supplies here, resistance. So maybe we come back up here and we test this resistance. Maybe we deviate, we wick above, we deviate. So that's a possibility. But it is a weekly bearish breaker here, and it looks like the breaker goes all the way up to here on this candle. So I think we haven't really retested on this weekly breaker on maybe we did. I think maybe the breaker is here. I mean, it's basically at this wick low. So I don't know. We could go in this weekly supply here, and risk to reward wise, like it kind of looks like that wouldn't be like a bad deal before going into unemployment claims, and then getting in a short around weekly resistance or supply on all these things. But we need to see some kind of validation of that happening. I don't know. EURUSD here looks like we're fine. We just kind of have to clear those levels. Here we had a breaker to the upside, and it's holding. So here is the close of this weekly candle close high before the up candle before the down move, and we didn't really test support really, and I think that works to our benefit for the shorts. There's all these inefficiencies that it's gonna come back to, and I think it's just gonna be overwhelming to the downside, just because like it's just left so much. It's so thin there that it doesn't look like those buyers are really convicted. It looks like maybe it's just one buyer, but that's a speculation there. But yeah, with the last week high, like on Euro USD, I wouldn't be surprised if we wick above it. Like I know we already did that on S&P 500, wick above the last week high, but there's these other asset classes where they haven't wicked above the last week high, whether it's Euro USD and the currencies, or if we look at I don't know what I was looking for. Oil. I don't know if we're going to be able to get a wick above the last week high here, but we already did it with S&P 500, just barely. But another thing would be the RSI. Like the only thing that's really overbought is the Dow. but the Nasdaq and U.S.S.&P 500, it looks like we got a couple points before we can reach overbought. And I think those places where there's room to run will allow some kind of short-term bullish movement, possibly to fill the rising wedge or bear flag. Um, a lot of people, I don't know, like Jim Cramer, might be speaking about Jim Cramer. I almost assume that anything that comes out of the mouth of Jim Cramer is like the majority of everybody. But let's see what his inverse Twitter is saying. So, looks like 1 hour ago, Jim Cramer says there's enough pain in the market for the Fed to slow rate hikes. So there you go, like a bullish sentiment for Jim Cramer. So that's not necessarily what we want to hear, but it looks like maybe there's more pain to the downside, and who knows, that might even be, I might even be wrong with the short-term bullish movement. Maybe it's a fake out right now, and it's a false sense of security. But I don't know. I like to think that in some way it fills out just for like the OCD people, just to like be okay with things. You know, it'd be kind of funny if like the people that are controlling the markets and the trading and the price action are OCD. That would be kind of funny, just because it would make a lot of symmetry and at least some sense to the chaos of just the randomness and trading. But so Jim, cash out on crypto while you can. You should exit crypto sooner rather than later. So I got a long on Bitcoin, to a certain level, and then I'm gonna go heavy on short. So that's kind of just because I'm playing the efficiency. It went too extended to the downside, and it's gonna go reestablish equilibrium on those fair value gaps, and that's what I'm aiming for, a reversion back to efficiency, but to equilibrium. And Jim Cramer is like really good as far as a indicator for retail sentiment, and he's bearish crypto, and he's bullish the market. And if that should tell you anything, it's to tell you that, hey, if you're really bullish, watch your downside. We got 20, maybe 25% to the downside. So come up with a scaling in strategy or a risk mitigation strategy if you're planning to be buying, or you could just do low variance, or what's it called? Low vol, which is basically dollar cost average weighting on everything, equal weighting on all times, or so. I mean, that's like the default of everybody, which is dollar cost averaging. But that's like a low vol strategy for low variability. But there's ways you could be more efficient. So, and that's kind of just where I come in. And but yeah, just if you're really bullish, I don't know, just check yourself before you wreck yourself, or I'm bullish for 2023. I'm bullish after this pain, like whatever it comes. I just think it's kind of funny, like either the other people's analysis and how they reach their conclusion and their belief. It almost tells me a little bit about them in some way, and I'm open to people's thoughts and beliefs, and even if they differ from my own, I just like to hear just some kind of rationale that makes sense. And sometimes you have to be okay with it not making sense, just because that's human nature. That's people. They'll just do things that don't make sense just because they want to, and that is a reason enough. But this is just kind of kind of a gut check on my long on Bitcoin, and we have an invalidation point where we think it's wrong. But yeah, definitely short term long. Right before Wednesday, I'm going to get out of everything. Very like short, maybe 5-10% to the upside. Then I'm looking to be efficient on the portfolio and then go short on everything. Um, but yeah, that's pretty much it. And as far as like something that can give me the best bang for the buck for upside, I don't know. I was thinking it comes down to one or two things. It's going to be either shorting crypto that's going to get me the most, or it's going to be UVIX, UVXY. Uh, I think that's it. What it is, UVXY. Yeah, it's either UVXY or um, it's going to be the crypto, and we only need to go. I don't know, up to 20, and we already have over 100% on it. And crypto, we could see maybe 60 to 80% reward. So this UVXY reward is kind of crazy if we are able to get some strength. Like look at the range on these candles in some of these days. Like look at this is 2020. Oh, I hope that like goes back to the middle. Like I really, there we go. Okay, it's back in the middle. So look at some of these candles. So this candle, uh, 1 week of this from here, over 100% on 1 week. Like it's ridiculous. Multiple weeks, it made even more to the downside. So like that's kind of just what we're trying to organize a portfolio where we have equal footing, and this thing's all the way at 9.19. Like how bad can it get to the downside? Like come on. But I think we're at the lows as well. I think we established some equal lows to some point, and I don't know. I would like to see a deviation, so that also supports my short-term bullish thesis that we come down into this zone for a nice stop hunt, and that would be amazing. Then I could have my cake and eat it too. I could get the very bottom of UVXY, and then I could get the very top of a nice upside and then position short for everything. And then when it comes to SRS, I don't know. I'm thinking maybe I'm missing the boat a little bit. See, this is the weekly, and then market structure break to the upside. I think that was like the best entry right there. I'm gonna wait a little bit on if that upside comes through for like the market for a nice on either EURUSD and all that, just a little bit more, and see if maybe things can come down a little bit more. Maybe this comes into this supply zone here. If we were to draw a fib on the quarter, maybe we want it like this. Maybe we can get it into this this down candle right here. Like we can get in here. If we can get in here, that would be kind of amazing. No guarantees though on SRS. So I'm thinking to the short side, we'll do maybe 20% on SRS, 20% on GLL. GLL, we're down a pretty penny, and we're almost in demand. If we were to do the similar thing about, let's see, what's weird is this last quarter low is somewhere that I can't really attach a magnitude. I mean, we kind of have to do that. Yeah, so this one's almost on its way. If GLL can get in here, that would be great. it would form some kind of, I guess, cup and handle kind of thing, and then maybe deviation above here, and then come back down for short on gold. Um, so 20% SRS, 20% on GLL, and then I'm thinking 50% on UVXY, and then 50% short SPXS, 3x leverage short on S&P 500, and then roughly 200% short on cryptos. We'll see if I don't know if cryptos will go up during this time. It just seems like things so far got extended a lot to the downside that there could be some upside for everything. But that's kind of just my estimation. I think there's just this window with the dollar. So now we're talking about the dollar. Let's see what it's at. Let's see. And we were talking about the yen. So here's the VIX. Like, it's still trying to figure out where the bottom is. And here's the yen. We started to move a little higher. We haven't really retested that daily breaker. So I'm betting that we're going to retest the daily breaker. If we see an H4 break on the yen, we're safe to say we're going down to retest, and we could see some more upward movement in the market. And then the euro, the yen and the euro, we're really depending on for just guidance here. And it looks like it's still strong. We're going to test this supply all the way up here. That's what it looks like. And as long as we don't have any H4 breaks to the downside, we're good. We're good until Thursday. That's the way I see it. And then the dollar, like, yes, I don't know, this is looking like a bear flag in some way, or a bearish symmetrical triangle or rising wedge. It looks a little bit like that. But I don't know, it's taking its time here for, let's make sure it's not aggressive. Are these under the aggressive mode? Kind of curious. No, they're not good. So, I don't know, maybe purge the last week low for a deviation on the dollar. That makes more sense to me. Stop hunt on these bulls, and then reclaim the 72, and then that's it. Like, if that were to occur, I'm not sure that, that's for a bullish sign. That's what I would want to see. When the people see this move happening, I mean, there's a gap here too. It's gonna probably fill it. So it's gonna come back down. It's just a matter of when. But yeah. So you could see just kind of what I see, that there's an opportunity for some upside in just almost everything, but for a limited amount. And the goal is to capture that window in profit, and then also, once it hits the top end of that window, get in a position for the short side to capture the reward for the downside that we're suggesting might come. Like, it's the future. We can't really. But here we got possibly the top showing in around the 20th. I would say just pretty much the end of this week. We're expecting some kind of top. I don't know. I've been kind of talking about that a while, but it's just been kind of hard to discern. I mean, it's so choppy, and this is not like a magic bullet solution, even though I kind of treat it like that in some way. But here we got the peak here and around the 17th and 18th. So the 17th and 18th is like unemployment claims. So for like a fast kind of reading intra week, this is the best I got. Like, it's between pretty much the 18th and the 20th. We're expecting some kind of event that's going to break market structure to the downside, and we're kind of hanging our hat that that's the top. And right now, with institutional money on the Williams Money Flow Index on the daily, we're bullish on Bitcoin. So I went ahead and positioned accordingly. I'm bullish on Bitcoin, and for a limited amount, and then I'm ready to be right back in there to short all crypto. And then S&P 500. So this one is weird. I think it's gonna reflect for most of the week, is that there's it's there is no bias in the institutions for the S&P 500. If anything, I think it's gonna go sideways, maybe wick up above the last week high, and that's it. And the institutions are gonna show their hand, but right now there is no edge in institutional money flow. But in terms of like overextension and resistance, there is a lot of proof to show that there's a huge chance for reversal to the downside, and that reversal to the downside will fill a lot of gaps that we put in on this big move to the upside. And if those gaps fill and it's a strong move, we will continue to go until we purge liquidity in S&P 500. And purging the liquidity on S&P 500 puts us at around like 3,200 or 3,000 specifically. And liquidity looks like this, like an order block, and if we were to see order blocks below us, this is the nearest thing we got, is that we're going to go into where there's a lot of liquidity, and that's roughly around 3,200, 3,000, and that's it. That's pretty much just a quick at a glance kind of analysis on Monday for this week and what we're expecting, and that's it. And what Jim Cramer has said, and what inverse Jim Cramer has said, and taking into account just kind of everything, cross asset class correlation, timing solution mass cycles, and key events that would have a move in the market. That's what we got.